Hi, I'm Greg Hunter. Welcome to USAWatchdog.com, and Merry Christmas to you. I have a brand new guest on this week. This is our Christmas present. He is a very smart guy. He runs Kirby Analytics. He is Rob Kirby. Rob Kirby, thank you for being on USAWatchdog.com in this Christmas week. You are a Christmas present.
Well, Merry Christmas to you, Greg. Nice to have the time to chat.
Well, I want to kind of extend your intro a little bit because, you have 15 years experience as an international broker of over-the-counter swaps. You do big macro research projects for, big clients. I'm sure you're not going to name them, which is fine. But you're a smart guy. The only thing that, my only thing that I'm sad about is that I haven't had you on much sooner. Because in the pre-interview, boy, did you ever drop some bombs. I guarantee the audience today that you are going to be enlightening. And I just want to bring up last week's, taper, the whatever you want to call it. I mean, they say it's a taper. I don't know if it's really tapering. I don't know if they're really cutting $5 billion a month out of the mortgage-backed security side and out of the Treasury side. I find that hard to believe, but I guess the market's buying it. And gold got smacked down under $1,200 last week. And one of the things you told me in the pre-interview, one of the things you sent me some research notes, is that, hey, there are no markets. And that there is a colossal fraud and price control on the price control grid. There are no markets, and is the taper routine and the vaulting up of the stock market and the crush down in gold, is this all part of the orchestrated ballet by the powers that be?
Well, yes, Greg, it is. And when we talk about the powers that be, we should identify who the powers really are. And the powers that be that are micromanaging all facets of our financial and capital markets is a branch of the U.S. Treasury known as the Exchange Stabilization Fund.
Now, I've heard about that, and some people, including yourself, call it the most powerful entity in the world, that it trumps the financial entity. It trumps the Federal Reserve. It tells the Federal Reserve what to do. It has massive amounts of capital and massive amounts of leverage, and they are basically in the world basically supporting the dollar. And I think you were telling me that there are some huge trillions of dollars in interest rate swaps that just went on in the last quarter. You got the report just last week, just before Christmas. Tell me about that, the massive amounts of interest rate swaps in there, and why are they putting all these trillions of dollars of swaps on?
Yes, Greg, the very day that they announced the taper, the Office of the Comptroller of the Currency released their latest quarterly derivatives report, which accounts for derivative activity by U.S. bank holding companies. And what we've seen over the last 6 months is a ramp up in OTC swaps by U.S. banking institutions to the tune of $12 trillion in notional. And this $12 trillion in build is largely comprised of interest rate swaps, and these are concentrated. And this build was all concentrated among three institutions, namely J.P. Morgan, Goldman Sachs, and Morgan Stanley. These interest rate swaps have bond trades embedded in them. So while on one hand they announce a taper, on the other hand we can see a clear. We don't see the latest quarter. Let me reference that.
Yeah, the fourth quarter won't come until next to 2014.
We won't see Q4 of this year until the end of March next year. But what we can see when we look back over Q2 and Q3 is a steady build, and what the build in these interest rate swaps is achieving. It's stemming the rise in interest rates. And as I said to you. Yeah, go ahead.
So for anybody that says, well, if they're going to cut, $5 billion in bond purchases and $5 billion in, for mortgage-backed securities and another $5 billion for treasuries, who's going to buy those treasuries? Who's going to come in and step in and buy those treasuries? And you're saying, well, and how are they not going to have interest rates go up when they, lower the amount of bond purchases that they say they're doing? Yeah, and you're saying they're doing it by these massive derivative plays.
Yes. They're doing it through stealth, Greg. The U.S. Treasury, when the Exchange Stabilization Fund does interest rate swaps with the U.S. banks, They use the trading desk of the New York Federal Reserve as their broker, and the New York Federal Reserve has direct trading lines to the treasuries of all these banks. And what they do is they execute these interest rate swaps, which makes, you see, banks trade interest rate swaps on spread. The U.S. Treasury, when they operate in the swap market, they do not operate on spread. And as a result, banks become captive buyers of U.S. Treasuries to hedge their swap trades that they're doing with the U.S. Treasury.
So basically, there's an elaborate, behind-the-scenes, ever-growing derivative position that's growing.
Yes.
Is it ever going to shrink? And when does it blow up?
It can't shrink. It can't shrink. And it grows by stealth. And it's never transparent. But you see, effectively what's occurring, Greg, is the U.S. Treasury, not the Federal Reserve, is dictating what monetary policy is in the United States. And they are executing U.S. monetary policy via the Fed, but through the trading desks of the big commercial banks. This is why, Greg, 5 banks can have derivatives books of over $50 trillion, but never have a loss in their derivatives books.
Because the Treasury is backstopping them. They make
sure.
Well,
no, because they are de facto enacting or implementing U.S. monetary policy. You see, you don't need to be brilliant to be a bank trader when you know where interest rates are going.
Oh,
you
that's
see,
right.
And my whole contention for years has been, we don't have markets anymore. Everything is arbitrary. Everything is micromanaged by the Exchange Stabilization Fund in the United States. The Exchange Stabilization Fund, as I think you're aware now, was created by an act of Congress in 1934. Their sole raison d'etre is basically to defend the U.S. dollar and maintain the U.S. dollar as the world's reserve currency. And by dictating through this derivatives complex, which I refer to as a price control grid, they are able to dictate and arbitrarily set the prices of all strategic goods in the market, whether it's capital, whether it's energy, whether it's precious metals, or whether it's the level of the equity market. These things they can control all through generous application of derivatives, which some people know as futures. Me with an interest rate background, I refer to it as interest rate swaps and another interest rate product called a forward rate agreement. And you see, they can, and in the energy complex, they look at the disparity we have in the energy complex alone, Greg. We have natural gas selling in the high teens in Europe, and we have it selling for $3 and change in North America. We're told that the reason for the disparity is because of local markets. You know, we experience daily, or certainly weekly, if not daily, we experience waterfall declines in precious metals that literally come out of clear blue skies like a bolt of lightning. We have 10-year U.S. bond rates yielding under 3%, and I would posit that the United States is actually insolvent. And we have countries like Greece where 10-year treasuries are yielding over 9%. You see, if there was a one-off anomaly in one market, you could maybe say that it's due to something very technical or very quirky. But we have a litany of absolutely incongruent occurrences in markets. You know, why is natural gas $3 here and $18 in Europe? Why is American 10-year money? Why can the American government borrow at 3% when Greece is over 9%? Why is West Texas Intermediate trading in the low 90s when Brent North Sea crude trades for over 110? I mean, this is all ridiculous.
Boy. I told everybody
ridiculous.
you wouldn't disappoint, and you are bringing it. The gold price, the latest smackdown, they got it below 1,200. I mean, doesn't that make it worse? Isn't China just gold under 1,200? How much can we buy today?
There's a universal constant in economics is and always has been like rivers flow from mountaintops to the sea, physical gold has always flown from countries with balance of trade deficits to countries with balance of trade surpluses.
From the
Whether
west
or not,
to the east.
that's right. And whether or not there is an official gold standard, because there has not always been an official gold standard, going back hundreds and hundreds of years. This is a universal constant. Physical gold always flows to countries that have balance of trade surpluses from countries that have balance of trade deficits. And listen, we know factually, because it's reported even in our brain-dead mainstream media, that Chinese appetite for physical gold is insatiable. And we know, because we have hard data, that physical gold is being shipped at breakneck pace. Let me tell everybody in the world that's listening to this, the amount of physical gold in the world is a finite number. And the amount that China has been procuring and been consuming over the last number of months and years is not sustainable. Okay?
They're going to run out of gold, is what you're saying. At some point, they're going to have a corner.
That is a given. That is a given, and that is absolutely a fact. And the real question is, when do we run out of gold? Because China's getting their gold from the West. So when does the West have none? When is the cupboard bare? And that speaks to a question you asked me in the pre-interview. You asked me, how long can this go on? I said it's going to go on until China stops getting the amount of gold that that they need or want. And when China doesn't get their gold, that's when this ends. Okay? And that might be when we have a war. Because isn't it interesting, as China ramps the amount of gold that they've been consuming and getting shipped to them, we hear rumblings in the background all over the place about calls from military or the specter of military engagements, whether it's between Japan and China, or whether it's in the Middle East, Syria.
Saudi Arabia is saying they're going to go it alone.
Well, you know what? I'll just tell you something. When the gold stops flowing to China, that's when somebody's gonna bang the gong.
That's when it's over. And are you worried about what do you tell people who say, I bought gold at 1,600 or 1,700? And I look at it like, folks, this ought to be a core asset, because whatever they're doing now, they can't be sustained. I think people should be holding precious metals as a core. I don't sell it. You can't buy it from me. I know you don't sell it either. But what are you telling your investor clients? Are you telling them, don't worry about the price, buy it? Or are you saying, oh, wait a minute, it's going to go down another $500? What are you saying?
I tell people to plug their nose and buy more.
Right now, buy it. Get in there and get it while you can get it.
I have been saying to people for the last 8 years, Greg, there's no such thing as a bad day to buy precious metal. Whether it's gold or silver, as long as you have physical ownership of the metal, there's no such thing as a bad day to buy precious metal.
You still have the same. Go ahead.
Yeah, well, my view towards it doesn't change, because whether you bought gold at 1,900, 1,600, 1,300, or 1,200, the reality is you should be buying some. Probably you should be buying some every month or every quarter or every 6 months, whatever your situation allows you to do, and you should be averaging in. And you see, my view is, I personally believe I'm going to live to see the day when wealth is not measured in dollars. Wealth will be measured in ounces. And for most of recorded history, Greg, wealth was measured in ounces, not in dollars, not in drachmas, not in these fiat creations of man. If you take all of recorded history and you put it on a yardstick, you probably have 30 inches of that yardstick where real wealth was measured in ounces, not in dollars. Dollars are a creation of bankers. And, bankers generally work for themselves. And that's a universal constant, just like physical gold flows from countries with balance of trade deficits to countries with balance of trade surpluses. I mean, this is a reality, and people need to get with it.
You've called this price control grid a colossal fraud.
Absolutely.
How long does this colossal fraud go on? Some people are predicting first quarter of 2014, maybe by the end of, but certainly before the end of 2015, they think the wheel's going to come off. I think the Obama administration with Obamacare has absolutely made a mortal wound in the U.S. economy. People are going to be paying way more. I don't understand the whole Democratic idea that they're hanging on to Obamacare, that it's going to be cheaper, it's going to be better. Don't worry, we'll get the website fixed. I mean, and I'm not a Republican, really. I just look at the numbers and think this is going to drain money out of the economy like a sieve. What do you think about 2014 and how long this colossal fraud, as you say, as you call it, can go on?
We actually touched on this a little bit in our pre-interview chat, and what I suggested to you, as I said earlier, it's really about when this ends is really about when China stops getting the metal that they're currently getting, or when or when the flow is reduced dramatically. And as we've already highlighted, the physical gold that China is getting is largely coming from the West. And so, what this really is a question about is how much gold does the West still have? And, and to that, I would suggest you really need to direct the questions to the leadership of America. And you need to ask them, why hasn't there been an audit of U.S. gold reserves for, since the 50s in the Eisenhower administration? There's been no credible, transparent audit of U.S. gold reserves now in close to 60 years. And, there's a lot of people out there, Greg, that say the real reason why there's no credible audit of U.S. gold reserves is because America doesn't have any gold, or it's largely been squandered already. And, the question, and when you got to understand, when you ask this question of leadership in America, these are the same people that you would be asking this question of. These are the same people that when asked under oath if they were spying on American citizens, they said no. These are the people that said when you raise the debt limit of the United States, you're not increasing the debt. These are the people that said affordable health care would not mean that your premiums would rise, and you would be able to keep your existing coverage, and you'd be able to keep your existing doctor, period. So, my response to all this about when this ends, it's going to end when the flow of gold that naturally occurs when a country runs a balance of trade deficit to countries that have balance of trade surpluses. When that flow of gold stops, that's when this ends. So, that could be the first week of next year. It could be between Christmas and New Year's of this year, or it could be in Q2 or Q3 or Q4. Of next year. So, but let's put it this way.
But the end is close. We're not talking about the kids and grandkids. You hear about that. The kids and grandkids, and I always tell people that's 80s and 90s talk, the kids and grandkids. This is coming for us in the here and now, right? Unless you're going to die in the next year.
Well, the reality is we have an ever-shortening fuse that is lit, connected to an ever-growing pile of explosives. So, how long is the fuse and how big is the pile of explosives when it goes? That's a question maybe for another interview and another day, and maybe for somebody else to really be commenting on.
How do you tell people to protect themselves? This is a pretty ominous interview on Christmas week, but the gift is you can protect yourself. How do you protect yourself?
You own physical metal. You want to buy and hold physical precious metal, gold, silver. You could even throw in some platinum. And you don't want promises of either of them. or any of them.
No paper.
You want to own
stuff in hand.
Buy coins. Go to the coin shop. Educate yourself. Educate yourself with real money. The U.S. Constitution mandates that specie is real money. And I would suggest that all Americans and all people around the world would do themselves a favor at Christmas by buying themselves a really, really great present, which is real money. Take your fiat money and exchange it for real money. Physical precious metal. Bars, coins, even jewelry serves. And you know what? Over history, all these things have served as money. And you know what? And they will in the future.
When this thing blows up, there's going to be a lot of angry people. Am I right?
Yeah, there's likely to be. Listen, the powers that be know there's going to be disruptions. They know there's going to be civil unrest when this blows up, and that's why they've been so hell bent on installing the police. The police state in America. All these things go hand in hand. We've seen a run up in the drum beats for war. Isn't it interesting, the timing? We see the war drums are getting louder and louder as the financial system gets weaker and weaker and ever close to a blow up, and along with the installation of a police state in America, all these things are occurring concurrently, like they're all related, Greg. They all blend and dovetail with each other, and you see because the people that are doing to the financial system what they are doing, they know exactly how this ends. Because, we have examples of it all around the world when fiat money has failed in the past. So they know what's coming, and they're doing their best to prepare for it, to protect themselves. And they tell us it's all about continuity of government, and they tell us it's all about our safety. And they introduce threats, I call it made up threats like terrorism and a war on terrorism and a war on drugs. No, they're installing a police state grid because what they've done to the money, what they've done to the financial system is unthinkable, and it really represents crimes against humanity, and they know it. So what they're doing is they're trying to front run the whole thing and install systems where they can protect themselves from disgruntled and angry and upset people who've had their sustenance and their wealth stolen from them. And this is what's occurring in front of us day in and day out. So, I mean, it's and the best thing you can do for yourself, get some metal, probably have some storable, food on hand and some potable water, or the ability to create potable water, whether it's through a filter or whatever. I mean, these are all things that are important. These are really important things that average people can be doing to protect themselves, and they should be doing it. So, I don't know what else to say. It actually, I find it difficult. I find it really difficult to even analyze the markets anymore, because, as I said to you earlier, there really aren't any markets to analyze. I'm analyzing a fraud. I mean, it's ridiculous. What we call our capital markets aren't markets. They're hallucinations. Because it's all made up. It's economic fundamentals, Greg, have been thrown to the wind. Economics has been stood on its head. We see things occurring in supposed markets on a daily basis that are incongruent. How can the price of gold be getting trashed when the demand has never been stronger? How is it that the stock market can make new highs on a daily or weekly basis when economic fundamentals continue to get weaker? How is it that the price of energy in Europe can be $20 more a barrel than the price of energy in America? How is it that natural gas sells for $3 in North America and it sells for $18 in Europe? Why is Greece paying 9% for 10-year money when America gets it for under 3%? These are questions people need to ask themselves, because this is ridiculous.
I think you summed it up when you called it a colossal fraud, and a colossal fraud in a price control grid.
Absolutely. Absolutely. And that's what it is.
But it's not going to last forever, right?
It can't. It can't, because, there's a fuse burning. There is a fuse burning. Whether people want to accept it or admit it, there is a fuse burning. And you know what? I can't tell you how long that fuse is. All I know is it's burning. And I know when I see a burning fuse, I want to take cover. And the way you take cover, the best thing you can do is get some real stuff. Get real. Get out of fiat and get real. And when I say get out of fiat, I'm not saying get rid of your grocery money for next week. But what I'm saying is make sure that you're looking at your portfolios and your net worth, and make sure that you have adequately invested or diversified into real stuff. Stuff that you can hold in your hands, or stuff that you can stand in front of with a gun if must be and defend it. That's what you need to own.
Rob Kirby, I told everyone that this would be enlightening, and it has been very enlightening. Rob Kirby of Kirby Analytics, thank you so much for joining us this Christmas week. Rob Kirby of Kirby Analytics, thanks again for joining us on USA Watchdog.
Nice to be with you, Greg, and Merry Christmas.